Welcome to our today's featured presentation, Trade with the Underlying Structure of the Financial Markets. We want to make it exciting for you. Do me a favor, or do yourself a favor, take some notes, because what is shared in this publication can change your world and your perspective as a trader tremendously. So let us move ahead. And let me introduce myself. My name is Thomas Barman. I'm the owner and inventor of Neverlos Trading. And I want to make you aware that there's a risk in trading, that we are not acting as broker dealers here. We're acting as educators, and past performance cannot always take an indicative for future result. With the legal part said, let us dive into the details. Successful trading is made very simple. If you can find and follow repetitive supply and demand patterns, you're in the game. In the old times, those supply and demand patterns were visible on the tape, so I put that here on the chart on the left. Today, we can use computer algorithms, vector graphics, all of that for our benefit to display those changes. And then when we see them, we can follow them. That makes a world of a difference for you as a trader. Many of you most likely still use old type technology like moving averages and all of that, which is force feeding the price development into a certain schematic. But this is no more a propel. What we want to do is we want to see the action of now, and from there portray it into the future. Now we come to prediction. To understand how we portray and follow the price action, we first have to understand that the price is a result. It's not a variable. Yeah? The price is a result of something that happens underneath. Prices are resulting on the chart that you see. And there are pre-stages of a price change where you can start measuring in a pre-stage what's most likely going to happen. And that's important because often we know when the price change is over, the move to the up or downside happened, and then it's recognizable. But what you want to do as a successful trader, you want to have a system that gives you pre-stages of a price change and helps you that you can spot and follow them from your chart. That's essential too. The chart has to be telling, the chart has to be your guide for the future, your guide to take your trade entry, your trade exit, and your guide of where you say my trade is no more in the right direction. I either need to adjust it, I need to put a stop. So as traders, all the time we are making predictions. And this funny gentleman here, Yogi Berra, he gave us a good line. It is tough to make predictions, especially about the future. There's a lot of truth and a lot of directional telling in this quote. Let us go into the details. When we make predictions, we always like it when predictions go straight up. Things are staggering all up into an easy and simple future. However, reality usually looks a little different. So I got it here on a chart because prices tend to go up. They tend to reverse at a certain point in time, and they give you a very different pattern until they reach the future situation that we were predicting. And this is where it gets difficult for traders. But what we want to do here in this presentation, we want to give you the background. We want to give you a systematic so that you can spot and follow those actions on your charts. Because we want to connect with predictions, the subjective and the objective reality, because just a mathematical model is not cutting it. You need to rely in your prediction who is acting, how are the key market actors transacting with each other, and what is the result. And only then can you do a good predictions. And so with that also said, everything should be not tested against the mathematical model, it should be tested against the natural model, and then we can see at the end of the day how well we do within predicting the future by measuring pre-stages of price moves and acting on them. Take a notepad and a pen and take some notes, because you will learn why prices move in a certain way and manner, and that is all supply and demand based and transaction based. And with that, we will help you clarifying in this presentation how you can make a change to your trading by using our type predictive models to interact with the key asset holders and to understand their action and to trade along with it. Very important for predictions. Reliable predictive models need to be based on the real world happening, not on a mathematical algorithm. Very important. We use math to build a model. of how the reality works, but we have to come from the reality, not the other way around. So coming into reality, let us take a look at the financial markets. 95% of all financial market transactions are institutional investment based. Important. Because they are institutional investment based, there is a way to measure their action and transaction, and with that, make a prediction out of it. Institutional action and strategies leave a trace for you that you can spot and follow on your chart. We can help you with our algorithms to find key crucial price turning points and understand why they are there and how far they're going to reach. And let us go into further details. Who are those institutional investors? To clarify this, we put together here a short overview of the biggest, see, Goldman Sachs, US company, JP Morgan, Bank of America, Merrill Lynch, Deutsche Bank, United Bank of Switzerland, Barclays, and so on. So you see national and international corporations, banking, and investors acting. But they don't all have the same strategy, and they don't play the same role, and they do not play with the same action. So now let us go a level deeper to understand the action interaction strategy and the transaction between those institutions. Then we will get the pattern, and we will see a pattern that we can follow. Let us start to define first the role of some of the bigger institutions. So you have here liquidity providers. What do they provide? They make the transaction quick and easy so that when you want to buy, that you immediately, when you pay the price that is demanded, get your asset for you to get delivered. Yeah, so those are the market makers. Yeah, or there's some easy ends and wholesalers all acting as liquidity providers. Then you have the big bunch of pro traders. Yes, those are the Goldman Sachs, the JP Morgan, Morgan Stanley. They trade their own money, they trade their account for the assets that they decide to either accumulate or to dispose. And then you have a lot of fund managers trying to do their pension funds, their mutual funds, following with the ETF and hedge fund, the overall market direction. So this interaction is crucial to understand, and we will translate it now into strategies where you see, okay, who are the leaders? Who are the followers and who are the gatekeepers, and what is their strategy, and how does that form a certain price pattern? Leaders, gatekeepers, and followers, those are typical roles we can categorize institutions in. And it's not that they only play one side, many of them play in more than one turf, but they try with a certain strategy to interact to their best interest. Yeah, the prop traders, they trade their own account, they usually look for the best asset in class. Where do we want to accumulate? What do we want to dispose out of our portfolio? Because they also offer a lot of specialized funds, which go back here to the banks and other insurance companies. So they lead the market with their action. And when it happens, it goes a lot through gatekeepers. Who are those? Market makers, yeah? Liquidity providers. They adjust their inventory. If they have the wrong inventory, they get out of business, yeah? If they sold everything at the wrong price, they can no more offer the next day. So they will do a certain price pattern and a certain flooding of supply or reduction of supply, because this is what they're really here in for. And within that, they are doing predictable price changes that you can see on the chart. And the followers, they're important too, because we like them. When they decide that the direction taken from the leaders is right, then we want to trade. And we go into further details with you. To be a sound predictive trader, you have to act on meaningful time frames. Why do we say that? Pretty easy. Look, the thing is, there's a signal which is a predictive happening. So something is happening, you see it. But on the other hand, there's also noise. It's a random happening. And noise is distracting us from seeing the reality. So you need to act on time frames for certain asset classes that are meaningful, because if you are in the middle of noise, you'll never find a real good signal. And in our mentorships, we definitely help you to specify what time frames work better than others. And I know very many people try to conquer the market on a minute chart, and I only say good luck, because it's a lot of effort, a lot of work. You trade for very little, and in the long run, most likely this will not give you what you want to have or where you want to be. And this is what we want to help you with, finding good signal to noise relationships and acting on them, and also acting with different strategies. It's not always that you have to buy the full asset. There's plenty of opportunities to work with derivatives and to be part of the market in your favorable direction with different kind of investment strategies. This chart shows you now the typical price pattern that results the action, transaction, and interaction of the institutional investments. Yeah, pro traders initiate a demand trigger. That gets visible definitely on the side of the liquidity providers and also of others who are in the market. So the followers come in and increase the demand. So what is happening to the price as a resulting? Prices are rising. But at a certain point in time, it is lucrative for key asset holders or liquidity providers to flood supply. And what will additional supply do? It'll drop the prices. So they buy back their inventory until prices drop to certain points, and all on that nice buyback programs. And then in the second phase, when another demand phase comes in, we'll then have those liquidity providers making the additional benefit from buying at lower prices and selling it back into the market at higher prices. And then demand comes behind it, and we find a price breakthrough or rejection. We will work a lot with that curve because it's so telling, and you will see it on the chart as it happens on multiple time frames. It basically happens on all time frames, but as said before, not all time frames are meaningful for you to act on. And so we will work ourselves in that, see it how it works for daily charts, hourly charts, and others. There's a lot of time frames where it really is high predictive, and how you can spot and follow the changes in supply and demand with a system that in the background considers that price move, or you see it on your own chart when the price move happens, but you need to have an indication when to enter. Yeah, so here's a nice entry, here's a nice entry too, and here's a nice entry. When you see him on the chart, it will be all simplified, and we developed processes and we developed vector graphics that help you to trade what you see. We are 8 years in business with that, helping traders and investors to follow those patterns. And those specific patterns that I'm showing you here are infinitely repeating themselves. They're self-similar across very different scales, on very different time frames. They also work on tick chart time frames or on range bars. It's always happening because the interaction of somebody flooding supply or reducing supply or somebody increasing the demand, they can be made visible. And we'll help you with that. And important is when you want to have a good model, math is the science to help you portray the things on, but it has to follow the natural model. And this is why we're showing you all of that here. Yeah. And the pattern is created by a simple process of supply and demand and repeats itself over and over in a feedback loop. So the initiation goes again. So when you then find a certain price level, then again you have demand coming in, somebody rebalancing inventory, and a second phase of demand. So the initiation of the price change causes the reaction, and that is important. Driven by recursion, those price patterns are part of a dynamic system, and thus they give us the ability to predict the future happening with a high probability, and that's important. As a private trader or investor, you need a high probability. You even pay commissions, you have some slippage that you need to consider, and so with that, on a 50-50 chance, you're not going to get where you want to be. But when you can increase the odds to stack up in your favor and you trade at high predictable trade situations, that's going to make a change for you. Let us take a look how the pattern that we shared with you is portraying itself on a real chart. Yeah. So here we have a situation where in an early stage, our indicator told us here, early pro traders get into that. The orange indicator in Never Lost Trading top line is telling you that. And it's telling you there's a price development at least for the next 10 bars in that direction if the direction is confirmed. We come to the confirmation, but the direction for us is confirmed when the next candle ticks out the high of a long opportunity or the low of a short opportunity. So here it was a bicycle ticked out in the next candle, so therefore we would be in. And you see here now the pattern in for going up, but at a certain point in time, it's enough going up as somebody is rebalancing inventories, and then we have the breakthrough and the continuation. So you see the curve, demand, flood of supply, and breakthrough. Yeah, so that's what we want to follow. And here you saw the follower demand came in late, and many of those got chased out in the situation where somebody was rebalancing the inventory, buying back at lower prices, to then after earnings offering at a higher price, which was then confirmed and led to the second price phase up there. Predictive with clear signals at clear points, and also we always have a target. So here, for example, you knew when you trade that signal, the target's not going to have a far reach, and you better know so. Or you also knew I'm going to be in for a sequence of 5 candles, 1, 2, 3, 4, 5, out. Here it was 10 candles, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and then you see a little reversal. And what you also have on here on the chart, I come to more detail, the red line would be your stop trailing line. Yeah, so you have multiple indicators on here, but important, you can follow the price pattern with an early stage entry, with a continuation pattern when followers came in the demand, and on the side of the breakthrough. Isn't that nice? Could you trade that with your own system like this? If not, consider to give us a call at neverlosttrading.com, and we'll help you to get an understanding how that can be put into your daily trading. With the right trading system on hand, you now can detect pre-stages of a change in supply and demand, which then lead to a directional buying or selling opportunity, and you can follow and detect the price happening where it most likely leads to be a rebound and breakthrough. So that's very important for you as a trader. If you can follow such signals, and there's more on the bottom, here it's like a piano where these colored bars tell you when most likely a price change is coming on the horizon. And you see here over earnings, definitely something happened. But these are warning signs or signs of interest where things might close to be happening. So you see here, something might be happening. Yeah, we got a long signal. Alrighty, something is happening. We had a nice long signal too. Then a big change in supply and demand, and a change in ownership and breakthrough. And then here again, all the way up on high, higher exchange, highlighting here on the volume bar, leading to a position when then the price move is watering out or rebalancing of inventory takes place. Yeah, very predictable, very much easy to follow through for you. Yeah, and trades are not immediately accepted as said. Other market participants have to confirm the new price direction, and only when that is given, a trade or an investment is accepted. Yeah, so only then we do it. Only when it's ticked out in the next candle, because then we're sure we don't stand on our own. Other market participants confirm the new direction. Our price move model, that is the underlying model for all our algorithms, defines that institutional early supply or demand changes is producing a price change that we can see as a resulting. On that, our algorithm is telling us something is going on. When a direction is confirmed by other market participants jumping on the new direction, then we trade, and we trade for a predefined distance. So we don't leave it up to you to decide when and where and how to get in and out. The entry is defined and your exit is predefined twofold. It's either defined by a target set on the chart, and I show you how we calculate it, or it's defined in Novellus Trading top line by having a 5-bar exit on blue and red signals and a 10-bar exit on orange signals. So it's all predefined what you do, and also is your stop level, but I give you all the details in what comes now. Combined with our price move model is what we call the SPOO. The SPOO is the price move per time unit observed that is predicted after institutional engagement is found and confirmed. Yeah, so it's a dynamic measure. It changes bar by bar and always gives you an actual of the minimum expected distance the price is going to move from entry where you get into a trade. So back to the chart and let us see of how that is put forward. So now you're prepared with a defined entry and exit. Yeah, the entry you find on a chart spelled out by the algorithm telling you to buy above 92.90. Yeah, it's simple. You can do that. You can even act with a buy stop order, or when you go the other way around with a sell stop order, and then your order will only be fulfilled if your price target for entry is reached. And you can do that from the best comfort in the afternoon or the morning on a day prior, because you know the signal is on the chart, and only if it's confirmed you are placing your order. And so it can all be autopiloted. You don't need to sit in front of your screen to do that for if you trade longer term. Yeah, but key is always when the price threshold is then surpassed, then we trade in the new direction. Now we need to find our stop level. Yeah, and why is that important? Because you need to decide when you know the distance you want to trade for, what is the risk you're going to take to accept your trade, because there has to be a certain relation between risk and reward that makes it attractive for you to take that. And so at the beginning we put our stop 2% of a SPU below the entry candle, and then after we trail with our red line here on the chart. That helps you. And you see when the red line is surpassed in the price momentum of a following candle, then you see a change in momentum. Yeah, so it was blue, 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 then it changed down to red, and then it jumped up to blue and up here. So we haven't changed the momentum yet. We're still in a long environment, what's shown here on the chart. And so that helps you to bring into relation your entry, your exit, and your stop to trade with the odds in your favor. And as a chart example, here you see on the Baidu chart how an early demand is spelled out here by above 168.24. That's ticked out in the next candle. Then we reverse a little, but we never come to our stop line. And so with that, the trade is not in danger. And then we'll break through and we come to our target, or we follow through for a certain amount of bars and then take our exit. Yeah. So first trade is in and it's come home. Yeah. So then here after reshuffling a little, yeah, so typical pattern, you know now, reshuffling, then we'll get into the next buy point, yeah. Buy me above 176.83, next candle ticks it out and carries us home. And then we'll have another rebalancing of the on the chart here, sell below the certain price point. That is happening, and here at that one we always consider these horizontal lines as potential target lines. And then another very nice risk reward trade. Look, when your stop was over here and your target was here, you have a very nice risk reward trade coming on the chart, giving you here consecutive 3 winners in the continuation pattern on the chart, which we're showing you here, which is Baidu. In summary, when you follow our system, you trade when specific spelled out price thresholds are surpassed in the next candle. This way, you can easily operate with buy stop or sell stop orders if you do it as a day trader from the ladder. Yeah, then you say, okay, I want to enter above that price point, and you wait if it's fulfilled, if the price gets there, because then you might be in good company, because a lot of followers or their computers, they will buy with you or sell with you. Or you can work with a sell stop order the other way around as well. But when you say that doesn't all fit my scheme because I trade out of an IRA and going short is complicated, we show you in our mentorships also how you can participate with option strategies in that, requiring you only to put about 1 to 3% of the investment volume that you need for buying the asset forward. And with that, you can participate in any account on upside and downside price moves with limited risk and nice potential leverage. Yeah, we work a business plan for trading success with you, with every of our members and students. And with that, you see what you can do, how much risk you can take in every individual trade, and at which trade situation you act how, and which strategies you apply. To support your trading and also your participation in here, we want to give you a special offer on Neverloss Trading Topline Lite, or Neverloss Trading Wealth Building and Income Generating, where we put together a package for you to learn both things, the day trading and also the longer term investing or swing trading. Yeah, all of our teaching is one-on-one. We focus on your specific wants and needs, and always you get a session recording that you can go through the learned again and repeat it until it sits with you. Let us take a random day trading example that we picked. This is here the ES, the S&P E-mini futures. And on the futures contract, you see here, oh wow, 2 indicators agreed on the same direction. So that's powerful. And look what a wonderful price move came out of this. What a wonderful price move to the upside, and see how you can trail here with your red line, your move. And the moment that price level was undercut, a new direction came on the chart and supported again by sell and you can easily put your order in here. It's an hourly chart that I'm showing you here, and go to the downside, and you will see, I'll show you the downside pattern soon. So here's also a downside pattern that we will be able to spot and follow. But one good trade, two good trades, three good trades in the directional price move. What's here? Why didn't I highlight this one? Because the next candle didn't dig it out. No reason to trade, and that would be a potential loss. But also we show you usually in a continuation of two light towers, power towers in a row. But anyhow, we'll take it as a loss, saying, okay, we traded mechanically, but then we have another win. But what does it mean? High probability trading. Look, 5 trades in the consecutive price movement of the ES in 3 days, and 4 of them winner, 1 loser. That's an 80% attainment rate, pretty solid. With our presentation here, we want to encourage you to learn to trade what you see. Then you see where prices rebalance and then maybe taken out or get rejected and take an opposite price move to the downside. And when you trade like that, your chart is telling the direction you're going, where you enter, where you exit, and where you put your stop. And this is why we say, let the chart tell when to buy or sell. Trade what you see. That's also our name on Facebook. As a successful trader, you'll need to minimize the interpretation of what you do. The key will be that you operate with clearly defined entries, exits, stops, as I've shown you here. Yeah, and stop can also be a trade adjustment level. This is where our name come from. Originally, we saw never stop loss trading, but that was a little lengthy, so never loss trading is the short form of that, because we teach also how you can adjust the position if it goes against you and still turn a loser into a winner. Yeah, so that's very, very powerful, and we teach that in our mentorship classes. Yeah, and we follow this pattern of the natural action and transaction of the markets. With the right tools on hand, your chart can tell when to buy or sell. That's important. And you see now how with the early entry, the follower demand, the rebalancing of inventories, you can predict most likely what's going to happen, and you can predict it more often than not. And that makes a high probability trading system for you. And when you can follow those price moves from your chart, and when you can follow them with clearly defined entries, exits, and stops, it'll make a world of a difference for you as a day trader, as a swing trader, or as a long-term investor. We now make the transaction and interaction of institutional investors our favor, yeah, because by the sheer size of their interaction, price pattern develop as you saw them. Yeah, the gatekeepers do something, the followers follow, and we are in the middle of that. We have the ability to be faster in and faster out when we spot the happening. You institutional investors are usually big size investors. They have to scale in a position, they have to scale out of a position. We as private investors, we have the advantage of speed, and with that we can be easy in and easy out with entire positions, and with that participate in great price moves initiated by institutional investors. This way you enter when the price move happens, and very important, you exit before it ends. Yeah, because this is where a lot of the private investors pay their toll by not getting out when it is reasonable. And then the price goes against you and takes away all your profit. We want to get out before the price move ends, and we want to get in when it is confirmed. So now that we made the principle clear, let us throw in some examples, yeah, of different assets and different time frames of how things are working. Yeah. So here, for example, we have a strong pro trader initiated demand early in the price move of the Canadian dollar here as a future on a 1-hour chart, and then followers take part of it, yeah, trigger it high, and then at a certain point in time you see your rebalancing of inventories, and how you can trade along with all those price moves by following the price action that comes right from the chart for you. Yeah. So next example, we are going take a look at Amazon on a weekly chart. Also, these patterns are on higher time frames, and as said, we teach you how to trade and follow those with options. So with that, you don't have to tie up too much money in all of this. But again, look, pro trader initiated early demand, followers come in and follow through at a certain point in time, rebalancing of inventory and second demand phase. So what had I shown you prior? Yeah, so we'll have these price move to the upside, rebalancing of inventory, and breakthrough. If you see that on the chart and you pair it with your indicators, you have a high chance and a high probability to trade in the right direction. What you see here is a 10-minute chart for crude oil. And again, you have the pro trader initiated first phase of demand, followed through here on the followers getting into it, and at a certain point in time indicated by our signals, a rebalancing of inventory. So you see we have consecutive, repetitive patterns and signals on hand that help you to make meaningful trade decisions along the lines where institutional investors accumulate or dispose an asset. How does the price move look like when asset prices drop or fall down? Let us take a joint look and we'll come to pro traders initiate supply, so they flood supply. Then followers see, oh my God, that asset is on a supply, so they follow it until we have a rebalancing of inventories. How does that work? By rebalancing of inventory is pretty simple. By price point, less offering goes in the market by those who can, the market makers. Everybody who wants to cover their shorts then has to pay the prices up, making the price to rebound. And then on the second supply phase, we are going with that. And so you have a couple of chances to go along with this. And we show you on the chart to follow that repetitive pattern on the way down. Supply comes in, followers follow the supply, short of supply, yeah, making everybody who wants to cover their shorts paying higher prices. Then when the price turns around towards the downside direction and potentially breaks through, we have multiple stages where we can find entries and exits with our charts. So again, we follow the same price initiation move. And here you see pro traders initiate first supply on an orange signal. That was not confirmed here, so we're ready to trade. But here, the moment followers sell off, that's the candle we enter into the trade and we start the move to the downside. And you see here how we are rebalancing inventories and then how we'll come and trade and follow. What you see on the chart is Goldman Sachs on a daily chart. Yeah, pretty impressive of how you see now. This is a clear action that you can follow, and with the right signals on hand, you are ready for doing the rebalancing and you are ready for doing the breakdowns. What we do now is we take the two sequences of a price breakdown and a price breakup on the chart for you and explain the details. What you see in addition is what we have here, a seasonality curve. This is a very essential tool which is only available in Never Lost Trading Top Line. And when you see one thing, when prices like to bounce off that curve, yeah, accumulation at the curve, breakout, and then reversal, accumulation at the curve, breakout, and potentially a reversal. Yeah, but so here's the price pattern. Yeah, you see the breakdown pattern. Yeah, so early sell off by institutional leaders, followers follow through, bring the price to a breakdown. Then you have accumulation for some time when you are with the seasonality curve until the signals come and indicate a breakout to the upside, a rebalancing of inventory, and breakthrough. Yeah, so this is a Goldman Sachs daily chart for the last 6 months. Pretty impressive with the right tools on hand, how you can spot and follow institutional action, and you can trade at the right price turning points. If you like what you saw here and you want to get deeper into this, contact us. Our mentorships are always one-on-one because we found it the most efficient way to teach you to be the trader that you want to be. We install all software for you, so you have no work with that. It goes on a server. It gives you free real-time data. That's also very important. Always at entry, you know your entry, exit, stop to evaluate the odds. We give you position sizing tools on hand so that you know based on the trade setup from the chart, that's what you can risk. And this is how much you should be trading for. And also what we do is we give you time of the trade and risk approximation tools because you know, as I showed you here, for some of the signals we want to be 5 bars in a trade, for others up to 10, and we define that based on the signal at entry, and we do risk handling. That means also money management. Very important. Money management is a good part of it because you want to stay long term in a trade. When things go right, you want to act differently than when you have trouble, and we show you adjustment methods. Very important too. By teaching one-on-one, our capacities are limited, but we are open for new students right now. So you can reach us either at 866-455-5520 or write us an email at contact@nevelostrading.com. And feel free, if you are really interested in our system, to schedule a personal consulting hour. We will show you live of how everything works for your preferred assets, for your preferred time frames, and from there make a decision. If that is right for you, then we invite you to be part of the Nevelos trading community and teach you all the details of how you can spot and follow institutional price moves. Thank you very much for your attention. We are looking forward to hearing back from you. Bye bye.